Good morning, good afternoon. So I'm doing this little update as I promised this morning about DXY and Euro USD. So concerning DXY, first of all, I will probably stop sometimes because I'm trading at same time. The second thing is I have opened some more seats for the mentoring in summertime. It was booked, but I opened more hours. So if some are interested, just DM in Twitter. So concerning DXY, we had a top last week, which was a bottom on Euro USD when we bought the Euro USD, which paid us already, exactly 220 pips and should give more. So if we look at this chart now, you see we stopped right here, and there are several reasons why we stopped there. One of the most important reason, and that's why I went long Euro USD there. You see that's a yearly chart. So if you look at this yearly chart, you see that we had here the 2000, 2001, 2001, yes, open and yearly close. So that's a very important area. And at the same time, we had a very important here support on a quarterly time frame. This is a quarterly time frame. So this support is huge. So, and that support that usually DXY likes a lot, that kind of support on quarterly basis. So that's one of the reasons. The other reason why we had this stop there, I will take off this line now, so you know it. It was really to the pip. Let me show you right there, but it was really very, very precise. You see how it has been really very, very well touched, and we came back. So now, if we look on a bigger time frame again, and we stay on this big time frame, we will look at the ABCs and the retracement fib. So you know I work a lot with ABCs and retracement plus those levels that I just show you. So if we look there, we have several retracement. I already draw them because I want to go a little bit faster and not be drawing at the same time. So if we look at this one, so this is a big, let's go in Fibonacci candle. So you see, this is the biggest one we can get, which is a yearly ABC up, yearly ABC up. So that's very important, because where did we stop? Together with this monthly, yearly, quarterly level to the pip, we went to the 61.8 fib. Let's look this way, it's better. So we went to the 61.8 and we stopped right on this. Double yearly, quarterly order block and open close. So you see, it's very important, because the target of the ABCs are usually the most important one are the 61.8 and the 1-to-1 extension here at 121.37. If we look, what is very interesting here is if we would break higher, and we have the support and resistances there, you see that we have mostly here something that could be a kind of double top when we would touch the 1-to-1 extension. If, of course, we touch it, then we would have a double top with the 2001 highs. So that's something to keep in mind in case. I don't think that would happen now because of the technical readings on the indicator and the setups. I already explained that, and I will show it again later. So we had this ABC, yearly big ABC. If you look a little bit on shorter time frame, you see that like for example, the 38.2 here has done his job very well. Then we came back, we nearly touched back double bottom on the zero of that big multi-year ABC, and now we pull back from the 50% here. It's a monthly chart, huh? So you see how precisely we stop on the 50%. We nearly came back on the 38, then bounced back, and that's inside the war, of course. So that was before the war, I think. and that's no, that was inside the war even at the end and at the beginning, and that's when we started to go higher and higher. So it's important because that is validating our ABC. Then we have another, I have three or two other ABCs I'm looking at because we always need to look at different things and try to find confluence. So you see, this is an inside ABC with this impulsive move up. That's a monthly one. So you have this impulsive. If we look at it on, I will take off the other one. So you see only this one. If we look at this one on Fibonacci candles, so you see I put it here, we could put it there. It doesn't change a lot the ABC or the target, of course. It's just very little change because it's mostly a double bottom we had there. But if you want to make it perfectly, that's what you need to do. You need to check the lows here, for example, and make sure that this ABC is very well positioned. So the way to do it, just to show you, you take the coordinate in TradingView. You have here the coordinates of the 3 points of your ABC, A, B, C, and you just measure this one. You put the line on it, sorry, the mouse on it, and you see up there the low is 88,253. So 88,253, that is the low. It was written there. So I should change this one to 88,253 to have something really perfect, and it will be much better. Here it's okay because we did it with the magnet. So same thing here. This smaller time frame ABC, if we can say that, after the big yearly, we have the one-to-one extension there, creating a confluence with the 61.8 of the multi-year. So you see how I define usually an area to look inside very deep, to find, to dig inside on smaller time frame and find that kind of quarterly area inside this multiple confluence of ABC's important level, 61.8, 1-to-1, etc. And the last we have here is this ABC weekly. So I think it's this one, unless I'm wrong. So we have it there. So you see it's this big weekly ABC we have there. So it's more a monthly, by the way, but it's another smaller one. And it's interesting to look at it because even if we have the big one here and we see them, this small purple inside is working. We spike above it, but you see we had here the 138 extension of that inside monthly ABC. So it's something important to keep in mind because then look at that. That's exactly where we started the week and where we started to look lower. So it's very interesting. You see how we went up to this monthly, yearly, quarterly block of volume we have there to the peak. And then we came back to close right under the 1-to-72 extension, which is very important to keep them in mind because it can be used as support or resistances as it can be here. So you see we have here an open road from only those ABC's point of view. We have an open road nearly till this area that would be a big support around 104.70, 105 or something like that. But we have time before we will go back in this area. When I look at the setups on the Euro USD, it suggests that could happen, not necessarily in months, but it could happen in weeks. So that's where we are now here. Now, if we look at the retracements, and it's interesting to look at them because we can see things, very interesting things here. So first of all, on the yearly chart, what do we see here? We have some waves, one big A, B, C, D, so 1, 2, 3, 4, or something like that. 1, 2, 3, 4, 5. Okay, so you have a 5 wave here that could look like a 5 waves, and we have some impulsive move down, multi-year, 1, 2, 3, 4, 5, 6, 7, 8. It's nearly 10 years of downside here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You see it's another 10 years here, so you have 10 years down, a bump, 10 years down, a bounce. So that's what happened. When we look and try to figure out the behavior of an instrument, we look what it did in the past. And when we do that here, let me take off this extension on the right. When we do that here, you see that we came back here right the 50%. Take this off. We came back here on the first wave. On the first wave, here, this wave down, we came back mostly to the peak on the 50% before starting the new wave down. Now, if we measure where we are on this last wave down, you see we had this wave down, and we came back, and that's important because it shows you how strong, very strong is that area here. If you remember, we can look at it again inside with all those ABC. You see how crowded it is, but you see that all this area, let's say up to the 2140 fib, starting on this 2360 with this quarterly very important super level. So that's a very important level. So you see we had this area that was clearly drawn, and you have already seen it in my other charts since I post this video this year. This ABC has been here for a very, very long time. So it's another thing. We had the 2360 fib of that retracement. So at the end, due to the fact that we go up, it's the 7860 or the 7640. We put it the right way. So you see it's the 7640 of the DXY here, together with this multi-year open, close level, quarterly order block, and all those ABC together. So we have here a wall, a kind of wall that will give some work for Dixie if you would like to go higher now. Okay, so that's what we wanted to look at concerning the Dixie. Okay, so we follow now. I had to stop. I was looking at my trades. So now I go on with the Euro USD itself. So you see it on this chart. What do we have there? We have here the ABC that gave us the bottom to the pip, which is the one where I went long, and I called along due to the DXY level I just explained a few minutes ago, that you have seen these big resistances on area on Dixie, and we had the one-to-one extension of that big ABC down here of it's a weekly one, unless I'm wrong. No, it's a weekly one. So you see it's a very nice weekly ABC, very clean with this green candle here. So we had this ABC. You see we stopped there to the pip, and if we look inside, just for example on daily basis, you see how this one has been unfolding since it has been created. ABC, C is here. So since there, you see we broke through the 2360 fib. Let me put that up so we can see them on the top. So we broke through, we bounced from the 50%, came on the 2360, broke again the 38.2, went to the 50% for the second time here, came back to the 38.2. So this time it's what we can read when we see that kind of price action. We have, let's say, a double level cross here. We cross from there to the second level. Then we bounce here and we pull back from only one level up, which means the trend or the momentum here was much stronger than it was there. So that's when we can take shorts here, and that's what happened. So then we started and we saw the big acceleration we had. This is a daily chart, and you see we have been using, if we look on the 4-hour chart, that we have been using those fib in several occasions, even if we broke through them like we did here on the 61.8, which is usually very important. We just broke through it, came back inside, and then went down to the 76.40, 78.6, broke through it, touched the one-to-one, and bounced from here. So here we have several options. Either we can just break higher and go to this area, which is for me the next big target, first big target we have on the way, this magnet. So this is the breakpoint area. So that's where we break from a 4-hour point of view. That's what we break this big kind of consolidation we had there. So we broke here. You see how deep it started. So all this area is very important. We can even put it till there. So this is an area where when the price will come back here, for sure, we will find tons of sellers, because we will still be on the long time frame point of view in a bearish trend on the EMAs, MA, on the dynamic indicator that many are using. So we will still be in a bearish trend. So many will sell it either here or there for sure when we get there. So that's an important level, and I posted it earlier today. 103.60 to 103.80 or something like that, even 104, let's say 103.60 to 104. All this area here will be very important to look at, and a very good place to take a short when we will go, when we will get in this area, and that could happen sooner than we expect. So this is really a place to keep an eye on. The other point is we have there the 50% of that ABC. And the 50%, like in all Fibonacci and like in the nature, 50%, half of something, is always very important, even if the 50% is not a real Fibonacci level. It doesn't exist in the Fibonacci sequences. Just something that has been added by traders, as well as the 76. This level here, that you all know, the 78.60 fib, this one is not a real Fibonacci level. The real one is the 76.40 there. So that's things we need to look at. And of course, on the way up, the first area where we will see a pullback will be the 61.8. I want at 102.75. So that's where we are now. If we don't look only at this level here, we have some important trend line that I've been drawing. So this is my trend line chart. And you see that when we came here, where we have, just to refresh your mind if that's necessary, sorry, you see we have the one-to-one extension right to the peak there, and we had a confluence with this trend line that is taking those two lows here and this new one, of course. So now we have three touch on this trend line, and that's why we had a real nice confluence together with the DXY confluence I spoke about before. On the other side, we have this one that is draw here. It can look a little bit weird because it's broken through, but you see, if we look really in the volumes, you see, for example, here we spiked under it, but we came back above it. Here we have been playing with it, I would say, so many times, and we are still respecting it. Same thing in this area. And we had this one, so that's why I draw it like that. And if we look what happened today, it's a little bit funny, but it works sometimes like that. So if we look inside, you see we nearly stop on it right now. We came back on this lower one and bounced from, oops, sorry, I need to plot that one, otherwise it will move, and I hate when they move. So you see that this area is working, but we need to break through it. Then we will have another intermediary stop in that area, because we have here a 4-hour order block with a support resistances area. So we would come back here and probably come back on this trend line, the other one, or the fib we have just highlighted, this one, this fib. So you see here we have the 61.8. So it could very well be that we first come back, bounce, touch it again, come back, and then finally break through it, unless we have a big break on the ECB, if they would make a surprise on next Thursday, hiking higher than expected. I don't think it would be, because that's not how Lagarde likes to be. But it could well be she would be more hawkish on the further future heights, like in September, and she could speak about a 50% or something like that possibility for September. So that's what we need to keep in mind inside the ECB move. And you see that when you use, like I do, several charts with different things on it. So you see here how we are now struggling inside the 78.60, 76.40 fib right there. And that's where we are struggling inside. Of course, when I'm trading intraday, I'm not using only those big fib, but I'm looking for smaller time frame area like I did this morning. So of course you can use the tradition. You can use the traditional extension, not extension, retracement of that fib, and look here, for example, and say, okay, we stop on the 2360, 2140, which is, by the way, I had not prepared that. I do it myself, but I didn't prepare it. But if we stay above this one, it's very, very bullish, because those one are the one that if you can break the 2360, it means we have a very strong momentum on the side that was doing this fib. So it means on the upside, and then we would go up. We could come back to the 38.2, which is at the same time showing some 1 hour support resistances area and probably some other things. So of course we need to use this one on a smaller time frame, and we can use there probably some 1 hour or 4 hour ABCs. And you can, when you do that job, of course, you can, like here we have an ABC, you can look at it and then you find more things. That's what we teach in the training, in the mentoring. But that's what we teach, and we teach the most important is we teach how to play with them, how to draw them, which one is the more likely to give a result. Like this one is nice, but is not the best thing I would like to see. You can see this one, which is the one I did this morning. I think I posted it this morning. So this is a very short-term ABC, but it's interesting to keep them. You see, we mostly double bottom there. And you see how, if we take this one, I will put it without extension, and it will be cleaner with another color and thinner. And you will see how this helps so much when you want to define some levels and when you want to see where you can find resistances, like here. For sure, some people will try to sell it. I've not checked the setup of this one, but that is clear. We have something, we can look at it here. For example, this is the setup of the instrument. Those one are not the most important. Those one are gravity things and things like that. But you see here, it's the 15-minute chart. The volume here and these dynamic indicators, they were here giving us a buy signal, and that's where we had the double bottom. That's where I added back some longs here, and that's where we are now. So we can use those things very, very well to know if we break above, what is the next target. And in this case, the next target for this one would be here at 101.87, something like this. And we know we have there another trend line up there with the 1 to 72 extension. So that's what we are doing. I just want to point out one thing now, which is very important. Let me reduce all those one, because those one are not the most important, but this one, and that one, if I can move them up. Okay, I will do like this. So those one are really the key indicator I use. So that's a volume based indicator. This is a dynamic modified RSI, and this is a price action indicator, dynamic too. So those one, they are much more reliable than any other oscillator. And if we look on a monthly base, and that's what I've been telling to everybody for a long time, we have here a really huge setup. You see how deep we are. And that's probably the deepest we can see since 2003, because we don't have the volume data on FXCM. We don't have the volume data before, but for the last 20 years at least, and I don't really think there is deeper than this, even if we would have the data of the past year, but that's the deepest probably reading ever seen on the Euro USD. So it's very important. Even in 2008, 2020, whatever we look at, we never had such a deep reading. And at the same time, we have a dynamic bullish signal here, and we have a dynamic bullish signal there. Those combination with all three aligned in extreme readings are generally providing over 1,000 up to 5,000 pips move. So that's why when we have this, and we had last week this daily signal, so it's inside the monthly that I just explained you. So we have this daily signal. You see, we have here what I call a small volume divergence. So you had two spikes like this on the volume, and here we had a divergence with the price. You see, there is divergence between that and this, and you have all three together inside the monthly. So that's normally a very bullish signal. So we can expect several hundred up to 1,000, 2,000 or 300 pips on the upside, unless we would come back inside the monthly, because the monthly is not already over. If we look at those, for example, this one or that one, it's mostly the same we have there. If we look at them, you see we are still open on the sorry, it's the monthly. We are still open on the monthly, so we have some kind of slowdown. You see how that's showing the strength of the momentum. So the biggest is the space, the more strength we have. But what we see here, and this is my Emax indicator, what we see here, we are at the point where we could really cross over. And if we look in the past, we could really cross over, looking at how strong is the signal, for example, like it was here on the monthly base. And you see that the price started to really accelerate on the upside when we had this crossover. And that's the crossover we had on Friday, confirmed with the move up. I've been speaking about that all last week. I was looking at this crossover here inside this signal, which is a daily signal, inside the big monthly I just spoke about. And this crossover is the one that is confirming we can normally nicely add back on the long side till we stay under this line here, till we didn't broke above it and start to reduce here the space in between the line, the strength of the momentum. Then we can still expect more upside. So that's only technical, but we have to rely on something, and that's what I rely on. So have a nice week, enjoy the ECB, and remember, for the training, if someone to enter in the mentoring, there are some space available for this summer.